Okay, wow, so fantastic. I've got three incredible panelists here, and you obviously read about them. But when I thought about three things that they share in common, one is they've invested billions of dollars into India, or will be investing. They've got dry powder, billions of dollars put into India. Two, this is not into an ETF or into a REIT stock, which can leave overnight. This is a long-term investment each of them is making. So these are sticky investments that they're making into India. And three, each of their firms or individually, they don't need to invest in India. They've got to make a decision in these global markets on whether to invest in India or outside of India. And so when you talk about building India, I can think of no three better people than the three people right here to talk about it. So to my left is Rajan Bharati Mittal, Penny Bodle, and Sujoy Bose. And with that, what I'd like to start off, just to set the stage, is just in case one of you happened to have been on Mars for the last few years and hasn't heard of their three companies or funds, just give the elevator pitch, 2 minutes on the company. They know your bio, but just the company. So let's start with you, Rajan.
I'm part of a first-generation entrepreneur family, Bharati Enterprise. We started in 1990s when India was actually liberalizing the economy, and so we are really, I would say, a product of story of India liberalization. And that happened in India by, as you know, by default. It was never suggested by design. There was no choice for the governments of the day to really liberalize the economy. And as you know, before that, India was such a restrictive economy. And I've always said that the difference between, India and our Asian neighbors has been always, we have really put roadblocks for the monies to come in, for the foreign direct investment to come in, and made it so difficult till then. And in 90s, when we started liberalizing, of course, India has had its own way, and the company has grown, and the group has grown alongside of this last few years of liberalization. So I represent a group which is in telecoms, which is our primary, I would say predominantly a part of our group, financial services, retail, food businesses, and real estate. Not only in India, we've also gone and invested in about 17 countries in Africa for telecoms. Started, as I said, in 1991, a very small group with $5 million of revenue. Today, as we speak, we have more like $20 billion revenue in 18 countries in telecoms. Fourth largest in the world as far as telecom numbers are concerned, about 450 million customers that we have. So it's really grown alongside as India has grown. And while I have my other panelists here who will speak, for them to invest in India is a choice that they will make. For me to invest in India was not a choice. That was my home ground is a natural corollary for a group like us to start building. And of course, at a time when the capital was in real short supply, and that's where a whole lot of foreign investors, when they were coming in, saw that opportunity. So clearly, the last, I would say, 20 years plus that has gone by, Indian entrepreneurship is seeing a very different way of growth, new ideations, and of course, that also is inviting funds like Vision Fund and many others who will come in India or are coming in India to see the growth opportunity.
In fact, that's a perfect segue. So one of the joint ventures, I realize it's with the parent of the Vision Fund, but let's talk about SoftBank and the Vision Fund. So what's the 2 minute when someone asks you, what is the Vision Fund?
So thank you very much for having me, and thank you all of you for coming, and thank you for allowing me to be on the stage with you. The Vision Fund was founded in 2015 as it was an idea in Masa's head. It was actually launched in May of 2017, and we burst onto the stage with $100 billion to put to work. It's the largest fund in the world. It's the largest fund in the history of the world. And it was really born of Masa's vision, both about the opportunity in the market around artificial intelligence and how it's going to disrupt every single sector, every single business, and every part of human life. And then also this sort of gap in financing in the market for private companies that don't want to go public as quickly. We are the only fund in the world that is capable of writing checks the size that we do in excess of $1 billion with some regularity, as evidenced by the fact that not even 2 years in, and we've put $80 billion out to work. And we'll be coming back out into the market to raise money again. The other thing that I would like you to know about the Vision Fund is that we have a dual remit. So first and foremost, we want to deliver returns for our investors, but particularly for our major investors, we have a mandate to deliver economic development in their regions. So we have invested in India by choice. You are absolutely correct, because we think India is absolutely fascinating. We've put, I think the figure that you had, Sunil, is a little bit stale because we move fast at the Vision Fund. So it hasn't been publicly announced yet, and I won't be announcing it here. But we've put just under $10 billion to work in Indian entrepreneurs. And that does not even count the investing that we've done in other companies that are moving into Indian markets. So that was maybe more than 2 minutes, but that's the Vision Fund.
That's perfect. And you said 80 billion.
$80 billion. I had one investment committee. So I've been in the asset management business for a long time. And I had one investment committee last August where we put 23 deals up for a total of $28 billion in one investment committee. Yeah.
Okay.
Yeah.
Sujay, with that, I think this is a perfect handoff to you, because India, sovereign wealth fund, infrastructure, three hot topics nowadays.
Thanks very much, and great to be here. Thanks, Anya, also for inviting. Anya and Irfan is somewhere around, I'm assuming. Great to be at Georgetown. Lived for almost 25 years next door, 5-minute walk from here. So it's great to be here to talk about India. So I moved back to India about 2.5 years ago to start building the National Investment and Infrastructure Fund, as NIF is actually called. In short, we are a fund manager focused on Indian infrastructure. We are structured in a public-private format. So 49% of our capital comes from the government of India. The rest of the 51% we raise around the world. But we focus on investing into infrastructure in India. Now, why was it structured in this manner? If you look outside OECD markets, then India is probably the largest market for commercial and privately managed infrastructure. Over time, it's probably going to become as big as several of the OECD markets, and it's on the way there. But India is a complex environment. The regulatory frameworks are still evolving. And to address that opportunity in India is not easy for the very large pools of capital that are actually looking for such investments. And those pools of capital are actually looking for long-term yield. Pension fund managers don't actually want to go in and make 18% return or 20% return over the next 3-4 years. They are looking to make 14-15% returns over the next 30-50 years, because that's what their liabilities are, and they need assets to match those liabilities. So what we do is we act as the channel. The partnership with the government is very crucial, because when you're going into a 30-year or a 50-year concession, having the government as a partner actually helps mitigate many of the risks that come along the way. But basically, the money that we manage is mostly coming from sovereign funds, pension funds. We have some Indian financial institutions as well. And as of now, we've been in operation for about 2 years. We've raised about $4.5 billion. We've invested some as well. And we continue to raise money. But over time, what we want to do is, in a way, like both of you have done, disrupt a little bit how core infrastructure is financed and operated in India, such that it's done with the right governance, it's done with the right amounts of capital, and it's done with the right expertise, and it's managed over a long period of time. So I'll stop here. I just want to quickly introduce my colleague Saloni, who's sitting there. She is the person who raises all the money. So if any of you want to chat with her afterwards, please feel free.
Okay, wonderful. Hi, Saloni. So Rajan, given that you've been investing in India for the longest period, and actually the reason I said that you do India by choice because obviously you're investing in Africa as well. Sure. And yes, in the early days, obviously India was the focus, but now, like most industrial houses in India, the world is the stage of investment. If you look at the Tatas and other areas, that's why I think you're intentionally staying in India and staying there. But I'd love to hear about how it evolved from the initial days in '91, which you called the economic independence of India as opposed to the political independence in 1947, and how that's evolved now. As later on, we'll talk about what's the future, but I'd love to hear about what you've seen happen and how you evolved your strategy around that.
India is a very large and a very noisy democracy. You have to realize that. And it's not a command and control structures that are around, and hence it has been I would say, difficult journey for Indian political system, Indian bureaucracy, even Indian entrepreneurs and corporate houses. And you will actually take 2 steps ahead and maybe a step and a half, backwards. But that's the nature of the beast, and you got to deal with that. And I would always say that if you have to invest in India, patience is very, very probably the key. Mm-hmm. And I know our partners, and I know Masa. And I know Masa rather well, and she knows it. He is a man who will actually come and invest for a long term if he has taken a bet on the country that is a long-term vision. So for him, it's not numbers that will be crunched on a quarterly basis or yearly basis. So that's good news that India is finding that traction today. And we are clearing the minefields of regulation. We are clearing the minefields of doing ease of business. We are getting the fundamentals right. And there is, as I call it, is a large nation, 29 states. The good part is every state is actually now competing with other states. So it's a good structuring of federalism where the states are actually going out of the way to say, while India needs to get an investment, but my state needs to get even better than the other state, which means they're clearing all the local, because there are laws which are by state and the laws which are by center, and there are some concurrent laws between both of them. Now, those all issues are being resolved. So really speaking, I would say India is at a good stage. As we speak, elections are going on. I have to assume there'll be a stable government. But we have seen many governments changing since '90. They've carried the baton. It's not that some government has come and completely decided to move away from the core. That's good news. So there is stability, there is continuity of the liberalization. And probably India is today ready for business. 90% of foreign direct investment, you really don't need to go to the governments of the day. It is on automatic approvals until there is something very specific that you need to go, like all other nations that will happen. So clearly the roadmap is being set. It always takes more time in a country as diverse and as large and as said, a democratic country. But it's on its way to a country which probably has a great potential.
Do you think that as you've looked from '91 to 2019, that the changes have been more just, the evolution has been more just by slow moves, or do you think there have been big bangs along the way?
It's, I would say, gradual. Mm-hmm. India can't allow a big bang because you can't be disrupting the system. It's a large system. And, but this government, I can say, has come out with some reforms which are very cascading, which are long-term. The central taxation, which is a long-term, which actually puts India as one market. The IBC code, which allows the companies to actually go down and say, we've done, we need to move on. I think there are certain structural changes that have happened. I would call them, people don't see it from outside, but they are big reforms.
In the recent past.
In the recent past, in the very recent past,
yeah.
I would say this 5 years of this present dispensation. Sure. But India moves in a pace that finds is, I would say, in a gradual way.
Sure. And obviously, one of the big bangs I can think about in India is SoftBank showing up for the entrepreneurs in India with 8 billion, 10 billion now. And, it's in the press that, the unicorns in India now have this opportunity with SoftBank coming in and other investors coming into India. So what changed, do you think, at SoftBank? Was it just Masa focusing on India and then seeing the number of deals that made sense out there? What changed from the Vision Fund's perspective? Well,
so first of all, Masa is very personally interested in India. And has relationships in India that are important to him. And in fact, he travels to India once a quarter to meet with the leadership and government and and people like that I'm fortunate enough to share a stage with, like you. So yeah, Masa is personally interested in the country, but honestly, that's not really the genesis for it. So the CEO of the Vision Fund is Indian. Several of our senior investors are Indian. But as I mentioned to you before, our first mandate here is to deliver financial returns for our investors. We have a fiduciary responsibility. So the reason we're going to India is because we can make money there. And I will not presume. I mean, we're living in post-colonial times, so I'm not going to presume to be up here on a stage with people who are from India and live in India and work in India and talk about what India is like. But what I can tell you from an external investor standpoint is that the entrepreneurialism is extraordinary. So we see some of the same characteristics in the Indian entrepreneurs that we have seen in the Chinese entrepreneurs and in American entrepreneurs. I mean, outsized ambition, right? And so that speaks to Masa's soul. I mean, that's really important to him. If you ever hear him talk about, what's the first criteria? I mean, first, we invest in companies. We don't invest in venture. We don't invest in science experiments. We invest in revenue positive businesses. But primarily, Masa will say, okay, first of all, is it a market leader? It's got to be a market leader. And then I have to look at the investor. I have to look him in the eye. I have to see that he's hungry. I have to see that he's ambitious. And I have to see that he wants to grow. And then I will get in that boat with him and go on that journey. And so I will just talk to you guys, if I may, for a minute about one entrepreneur in our portfolio. About a year and a half ago at a dinner, we went around the table and talked about what our favorite portfolio company was. And I named Oyo as my favorite portfolio company. And then I found out later that it was also Rajiv's favorite portfolio company and Masa's. So I think I picked well.
So Penny, 1 second. How many people have not heard of Oyo? Can you raise your hand? Or actually,
have you heard of Oyo?
Not heard. Everyone's heard of Oyo.
No, you haven't heard. Have you really?
Maybe we
You've
can spend
heard
a couple
of
of minutes on Oyo and just
Okay, so
set
yeah,
the
I'll tell you
stage.
about Oyo. So first of all, I mean, maybe the reason that you've heard of Oyo is because you're young. So right, like we're old, so we don't know. But I never heard of Oyo until we invested in it. But Oyo is actually a platform. So we call it a hospitality company, but it really is not a hospitality company. It's an AI company. It's a platform. It began in India, young entrepreneur. I'm going to tell you more about him in a minute. But Oyo provides an AI platform for the multiple mom and pop operators who own on average 1.6 properties and would not have the capital to invest in an AI platform themselves. And it helps them homogenizing the experience so that people, when they're traveling on a budget, they know if they stay at an Oyo hotel what they're going to get. And that's from the consumer perspective. From the owner-operator perspective, it helps with heat mapping, so dynamic pricing systems, and identifying how to price according to market demand. And I'll just tell you briefly, Marriott, which has been historically the largest hotel owner-operator in the world, has been in existence for over 100 years, is at 1 million hotel rooms globally. Oyo will surpass them this year. We are growing about 44,000 hotel rooms per month. Ritesh is the entrepreneur. He was 19 years old when he met Masa, and Masa first invested in him. He is 24 years old now. We are I can't give too much away here, but let's say the last round, there will be another one, but the last round we invested in was at a total enterprise value of just over $4 billion. And Ritesh, we invested in Ritesh, Indian entrepreneur in India. He was growing this business in India. He sort of, came up with this idea all on his own. We invested in him way back when. $50 million was the first check size, and the other check sizes have been much larger. I'll just tell you, we own 49% of Oyo, so you can do the math. We've really gone long on Ritesh. But Masa said to him, look, Ritesh, you've done an amazing job in India. Now I want you to go to China. So this kid moved to China. It's got over 1,000 employees in China, has completely conquered the market in China, and just last month, Ritesh moved to New York. So he's coming to the United States. He's going to take on Airbnb. And I promise you, anybody, even your parents, will have heard of Ritesh in 2 years if he fulfills his mission, right? He will be the next Mark Zuckerberg. And again, I guess the vehicle is the hospitality. But this is, make no mistake about it, this is an AI company. And there's so many, I mean, spending time with Masa, you learn to think big, right? So I've been in meetings with Masa and Ritesh and these dinners that go on for hours and hours, and they're talking about ideas. I mean, he's going to conquer the world. But anyway, he's a great success story for India. And it's also, I think, really interesting because we did originally invest in an Indian entrepreneur who was growing an Indian market, and you sort of think, well, India is so big. I mean, the opportunity for growth within India is practically infinite, but he's already gone on externally and conquered China. And then the last thing I'll say to you is that Ritesh has actually gone into the regions where we have our major investors. So in the Middle East, in Saudi Arabia, he's already created over 350 jobs and these are high-paying jobs for young people. We've just signed an MOU to provide housing for Hajj. So Saudi Arabia has a long-term vision to attract 15 million visitors for Hajj every year, and Ritesh will be providing the rooms for them. So,
Wow.
So just
Good,
to
yes.
to add to this,
Yes.
I mean, she won't know, but Masa knows. Ritesh, from when he was 16 till 19, before Masa really pinched him off us, he was the Airtel distributor in one of the states.
what?
No,
Yeah.
really?
Masa knows it. So
At 16 he worked for
at
you?
16, no, not yeah, of course, indirectly. He was the Airtel, which is my brand.
Yes.
He was the telecom distributor. He used to open one shop in Orissa, where he worked from 16 to 19, before he had this idea of oil. And then, of course, Masa got him, and so Masa and you owe me something.
That is amazing. You know what? For those of you in the audience who are students, my son, I'm actually here for a revisit. He's going to start school here, but when he hears about stories like this, it stresses him out because he's like, I'm such a loser. I mean, Ritesh is really an impressive young
I'm just going to add that there are a couple of YouTube videos where he talks about his journey from Orissa to oil.
Right.
And it's actually the humility and the vision is just fascinating. So for those of you, who want to see that, just go to YouTube and you'll see.
But I just want to go back up a little bit over here. So Penny is a parent of class of 2023. Her son just got admitted as a freshman into the School of Foreign Service. And so one day he's going to be sitting in Irfan Nuruddin's class and hopefully making a trip to India as part of that class as well. And I'd say just getting into Georgetown now is an achievement in itself, because the
amazing.
statistics of acceptance are just unreal as I speak to parents of children over here who went here, who have legacy, and he didn't have legacy. But anyway, I'd like to jump now to, and I'm going to put it a little bit on the spot, if that's okay, Sujoy. So, investors in India, when I go to India on real estate conferences, there's one person who's with a big institution who's actually invested in you. And there's this guy who's long Indian real estate, and he starts with, India is an acronym. It's, I will never do it again. But we're all optimists over here, and especially you. I mean, you left the IFC, a major role at the IFC. I've seen you talk about your father being very proud of you being a world banker and, not questioning your coming back to India. So obviously you're a big optimist. Explain to us, especially from a government angle, because this is the government, completely involved in what you're doing. Why the optimism?
So, if I go back to my IFC days, I used to run roughly a $15 billion portfolio of infrastructure. And of course, compared to what the two of them do, I do the boring stuff, right? It's core, bricks and mortar infrastructure. It's a very complex business, lots of regulations, lots of, the entrepreneurs are actually, they're very different in this business than in some of the other businesses. When we would look at that portfolio, which was across 45 countries, and look at and do an attribution analysis of what drove returns, right? And you would come up with a lot of micro factors, but three macro factors always stood out. One was growth. So you wanted to invest in an economy that was growing. Second was stability. So, what you spoke about a little bit, political stability, macro stability, currency stability, et cetera. But perhaps the most important factor was ongoing reforms. And what we saw that you could attribute returns to countries where you invested when there were reforms going on. Because what that tells you is that basically the country is kind of almost re-rating itself to a different level of economic activity once those reforms settle and once the country has transitioned. So I think what, not just me, but because Saloni and I are in front of very large pools of capital on a daily basis practically, having to sell not just NIF but also India, and NIF, which has a government angle, is even more challenging to sell than a regular fund with a track record, etc. So we face these kinds of questions on a daily basis, and what we see is it doesn't take long to figure out that every one of those pools of capital is looking to India as the next big play. They're all looking at it. We've had over the last 2 years that we've been there, these pension funds have what they call the Atlantis visit, where the entire C-suite comes and spends a week in a country. We've been through about 4 of them. And these are large pools of capital, more than $100, $200 billion each. So then the question becomes, it's not about where, it's about how. And in the how, the most important question becomes with who. Because really, if the other, when you do your attribution analysis, the other thing that sticks out is when you invested with the right partners in complicated countries and you actually participated in a sector or a solution. Airtel is a great example. IFC was one of the early investors in Airtel and made a substantial return. IFC was an early investor in Jet Airways, which today is a sad story, but those days we made serious money of that investment in the early days, right? So when you went into that kind of a environment, in the right sector, at the right time, but most importantly with the right counterparty. That was the key. And in my portfolio at IFC, what we very quickly figured out, or what we struggled with in India, was to find more counterparties. There were not, if you really think about who, you very quickly run out of names. It's the same few names that keep coming up over and over again. And if you really look at what's happening in India today, most of the capital that's going in is going in with the same few names. So what we are trying to do, the fundamental thing that we are trying to do is increase the number of counterparties. Counterparties who have capital, who have governance, who have expertise in the form of teams, who have the patience to stay with these kinds of investments for a long term. And the way I would position NIF to some of those pension funds and the sovereign funds is we are literally the beachhead. So we are now a team of almost 40 people, and we are actually growing. And you said for your students, we are recruiting. We just we just got our first IIM Ahmedabad student joining us, which we are delighted about. And the whole idea is to create a team that these pools of capital around the world that's looking for core infrastructure in assets in a country like India is able to depend on us to create the possibilities. So we create, actually what we do is we create platform companies. So telecoms, I think, is an advanced sector, but in ports and logistics, in airports, in renewables, in several other of the sectors, energy, we are literally trying to create the operating companies that will in the future become the Airtels of those sectors. So that's really the way we operate. And once we go through this, starting with the macro, trying to solve for how we do something, and then creating the who we do it with, it actually, that's why we've had so much success with the money, with the money that we've raised and the continued conversations that we have.
Sure. And living in DC.
And sorry, I want to add one other thing. And in this kind of a structure, the government partnership becomes an asset. And what the Indian government, I'm actually quite pleased with the way the government has actually engaged on NIF. Government is 49%. They are 2 out of 6 on the board. They don't sit on the investment committee. And it is a completely arm's length relationship that we have. The team is recruited totally from the market. And basically, we operate like any other infrastructure fund, except when we have issues during asset management or even during approvals, et cetera, we know who to call. And the people we call know that we are calling, and we have it's not a zero-sum game. What we are trying to do is really solve a problem for the sector in the country. So it works well.
fact, that's exactly the direction I was going in with, what is it like working with the government? But what about in terms of sourcing the deal? Is that something that you present to your investors, that because the Indian government is 49% of your fund, and investing in infrastructure in India, that sourcing becomes a little easier? Is that a factor?
No. So the government partnership does not affect sourcing. And so one of the things that, again, from my previous life, it was very clear was when you're getting into long-term concessions, you want the discovery of price is crucial. Because if discovery of price is not done early on, sometime during that period of the concession is going to be challenged. So we are very clear, we do not want any special dispensation from the government in terms of sourcing. We look to them for ideas. We discuss solutions. We take opportunities to privatize. So, you may have heard that recently 6 airports in India got privatized. One of my colleagues sat on the committee with the government that came up with the privatization model. Now, great, we love it. What, of course, we are very disappointed about is we bid on 3 of those airports and we lost. Okay. But that's fine, right? That's a role that we play as NIIF, which is really pushing the PPP environment in the country. Doesn't matter if we win or not. We have other ways that we have a competitive advantage when we are bidding on stuff or we are buying stuff. Sure. Look, at the level of capital that we are operating on, so we're going to have a core infrastructure fund, which will by far be the largest in the country. So we'll have a pool of about $5 billion of capital, of equity. So multiply that by 3-4 times. I mean, that's the space that we will be working with. I mean, in about a year, we've created a ports and logistics company with DP World. In a year, we've become one of the top 3 in the country. Similarly, we are working on renewables, and within a few months, we have 500 megawatts under development. So just because of the scale of the capital, the local presence, the support of the sovereigns and the pension funds that are working with us, and our ability to asset manage with the government partnership, I think we have a competitive advantage that helps us source, but we don't look for any special dispensation from the government.
Rajan, can we talk about which way do you see Bharti Enterprises going forward? Obviously, so far we've heard about how strong it has been in India, the money coming in as well, and I'll then follow up. I'd love to hear from all 3 actually in terms of the view going forward, and then after that, I'd love to hear about your investors, and what kind of questions, especially the ones from outside the country, what kind of questions they're getting. But let's start with what direction do you see in the next 10 years Bharti going into?
I'll retire in 10 years, that's for sure. That's one direction.
Which would be a loss to India.
No. Nobody's indispensable. That's a given. But having said that, I still believe the sector that we are in, I call it a treadmill sector. You have to run much faster every day without going anywhere, because technologies are moving at a god speed. And by the time you've invested, the new technology is hitting you. India still, kind of gone invested in the long-term evolution, LTE, 4G, and now we are all about 5G. And I have seen it in spurts, how it is kind of going around. And will India be ready in about 2 years? The answer is yes, because networks could be ready, but probably the utility may not be there as yet for India. But we're going to watch how the world comes around. And there are large capexes to follow. So really the sector that we are in is a very high consuming capex wise. Unfortunately, India is also a very value for money kind of a country. So we are probably the lowest paid, I would say, ticket in that sense in telecom. I'm sure people around here know you end up paying $50, $60 a month, give and take. In India, it's $1.50. And people are using 1 gig. I mean, the kind of data penetration that has gone through is amazing. But the volumes are huge. So India will require huge investments, and especially now with the IoTs, the AIs of the world. So we are very clear that telecoms per se is going to be the key for our group, and financial services, because people are very less insured in India, both on healthcare, life, and otherwise. So that's another area, and we do partner with EXA from Europe as our partners. So that's being driven. And the next big bet for us is real estate, commercial real estate, because India still needs huge commercial real estate. And not to forget the urbanization that is happening in India, the smart cities, the urbanization is happening. with young population that India has, the advantage. So a lot of people are going to move and are moving very rapidly. So that's an infrastructure area that we will kind of, look through that.
Sure.
And Africa is growing over a period of time. We will keep investing, and we do invest on strategic areas outside India.
Sure. Can we talk about real estate? Is that going to be, is this like Blackstone coming in and becoming the largest office?
Yes, it will be. It will be. It will be. In fact, we are creating actually within Delhi, right next to the airport, almost another Connaught Place kind of a situation, which is a large, development. So eventually, and we are seeing the Blackstones, the KKRs, the Warburg Pincus, all of them are coming in. And as been rightly said, I think there's enough money for India if India needs that kind of money. It's really the partnerships, the right people that they need to find for that money to be there, because it's long-term investments.
Of course, of course. And Penny, what about, SoftBank looks at it and obviously sees the opportunity. What is the future for the Vision Fund in India? And I'd also love to hear about the dual remit and how, India is also going to be looking, fit into the dual remit.
Yeah, so so first of all, I would, as I mentioned before, we've deployed about 80 billion in capital. We're going to raise Vision Fund 2. I mean, Masa eventually plans to be managing over $1 trillion in this strategy. We have already built the largest stable of technology companies in the world. And that's just Fund 1, we're just getting started. In terms of the vision for India, we've opened up an office in Mumbai. We are committed long term. We've got a very talented partner running the operations there, and then we have another partner in London. Munish Varma is in London, and Sumer Junega is in Mumbai, and they're focused 100% on India, sourcing deals. And then we just brought in a really interesting group into the Vision Fund, our operating group. 30 senior operators from industry and from consulting who come alongside of our entrepreneurs to help them on an as-needed basis. I mean, we don't, part of the Vision Fund strategy, we don't take majority positions in our companies. So this is really, we're backing entrepreneurs and they'll make their own decisions. But, we do have this team available to them to help them grow. And in fact, I just got back from India. I was in Delhi with our operating partners, meeting with all of our portfolio companies and talking about how we can help them grow both within India and ex-India, helping them form JVs, helping them with capital markets, and importantly, helping them with hiring. So we have just hired, McKinsey's head of HR has come over to the Vision Fund specifically to help our portfolio companies hire. Everybody who's growing a business knows how difficult it is to hire. So I'm going to put my plug in for the Vision Fund. You should come and work for us. But it is extremely, difficult to hire. So we will continue to hire and grow both the Vision Fund office in Mumbai and then our portfolio companies. And then, you mentioned the dual remit. So I also brought our major LPs to Delhi with me, the very senior leadership of our major LPs, including the heads of their states. Came to kind of learn about India and meet with all of our portfolio companies individually to hear about what they're doing and to become an active part of helping these portfolio companies grow within their region. So again, we don't have an LP relationship with India. So I'm not doing this, because I've got some sort of mandate or remit to do it. I mean, we're investing in India because we know we can make money in India. Let's be clear about that. But what I find really interesting is kind of like the story that I told you about Ritesh, that you can find this incredibly smart, incredibly ambitious, really hardworking Indian entrepreneur who can grow a business within India and then export that and take that to the rest of the world. This hasn't been the model up until now, right? You would have these major multinational conglomerates coming into India. So I think it's really interesting, the idea of taking that IP IP and taking, importantly, that entrepreneurial spirit and exporting it to the rest of the world, and we're gonna be part of that. If India is $10 billion out of the $80 billion that we have deployed in Vision Fund 1, I would say that we will easily double that as a percentage of Vision Fund 2, easily.
Love to hear what investors are asking you in terms of the ones who are not convinced and need to be told about India. What are the questions that they're asking that you figure they've already done their research, but love to hear what investors ask you. And you talked about you're talking to pension funds. You mentioned you're talking to people in Canada and Australia. Love to get some of the color that you're hearing.
So it depends on the part of the world that you're in. So if you're in Canada, they've already discovered India. And 2 of the Canadian pension funds are already based in India. We've just created a highways platform with with PSP, one of the large Canadian pension funds. We are in conversations with very advanced conversations with one of them, who are looking at a very large investment in our fund. Basically, they don't yet have an office in India, but they see us as the team. So Canada, I think, is already there, and it's basically one of the Canadian pension funds that I was speaking with. They are considering taking India to GDP parity in their portfolio in the next 3 to 4 years. Which GDP. Would basically mean their current investment in India is about $4 billion. If they do this is taking their investment in India to $40 billion. So that's the kind of, in Canada, that's what's going on. If you look at the pension fund market, Europe is, to some degree, they are already there. They're more in the listed markets than in the private markets, but it's starting to trickle in. The US is out of it. The US pension funds are, I'm sorry, I'm sitting in DC and saying this, but the US pension funds have a very different way of operating. The US pension funds are bandwidth challenged, so they have very small teams, and they prefer to make large investments with the global fund managers. So they invest in Blackstone, and if a part of Blackstone's money goes into India, great, they don't have a problem. Or they'll invest in, let's say, Carlyle's Asia fund, something like that. So they're picking an Indian fund manager or looking at a direct investment in India is less likely. By the way, I should have mentioned, the Canadians are looking at a lot of direct investment into a country like India. And what they've figured out is that by doing that, so infrastructure is not a growth sector, right? The infrastructure is a sector where your upside is capped. When your upside is capped, economics, what you leave with the fund manager is crucial. And hence, if you're saving the 300, 400 basis points, or in some cases more, every year for 30 years, that's a lot of money. So the Canadians are really looking at efficient ways of getting into the sector in a country like India. So that's a different story. I should have mentioned that. Sure. Australia is waking up. So the very interesting thing is that the Australian supers now are becoming a force in the infrastructure space. They are they're growing too big for the Australian market. They're heavily invested in Australia and other OECD markets. In other OECD markets, returns are dropping. So I don't know if you saw, Gatwick just got sold for sub 6% RR. That was the underwriting discount rate that was used. Sure. So in India, the returns are 3 times that. So basically, all these Australian pension funds are also starting to look at India quite seriously. What we are seeing, Saloni has been traveling in the US the last few months, and we are now starting to see some interest from some of the more progressive US pension funds into India. On the sovereign side, it's a completely different story. So the Singaporean sovereigns, the Emirati sovereigns, each of them have more than $10 billion invested in India, a serious investment. And they keep, one of the renewable companies that, a couple of these sovereigns are invested in, just raised $700 million in one fundraise from 2 of these sovereigns. So these are, so there's serious amount of capital coming into India. And then when you also see what the fund managers are doing, and I'm talking about mostly infrastructure, which is the sector I know. If you look at Macquarie, Brookfield, etc., all of them are present in India. Macquarie just we were bidding, they were bidding against us on a road, privatization, and their price was almost 30% higher than ours. The whole market was stunned. So this was a transaction where the reserve price was about 900 million. Sure. Macquarie's price was 1.5 billion for that transaction. So it's not that India is not on the radar. It's very much on the radar. I think the more important question that people are asking is how and with who.
Got it.
And once we are able to solve or answer those two questions, it's a different conversation. And these Canadian pension funds that we are talking to, a couple of them that are looking at investing in NIF, we've been successfully able to address those questions, and that's why we feel that we are very close to a fundraise with them.
Could I ask, in terms of returns, you mentioned 8%. Is that dollar returns that, earlier in the conversation you were saying, listen, most people are looking at, what they can get, and 8%, is that what they're looking for?
No, so what I mentioned is the Gatwick transaction, right. What is said.
No, this was very early in our conversation.
Right.
So when we just started talking, let me ask a question. What kind of returns are your investors looking for from a core infrastructure fund?
Again, it depends. So you have the very regulated assets where there's a fairly stable risk return kind of a profile. You're going to get about somewhere, and I'm talking Indian rupee returns, somewhere in the 13 to 15% kind of a return. Okay. The less regulated assets, so airports, which actually have a growth play, because airports are what? They're a big shopping mall with monopoly on traffic, right? Literally, right? So people have to come to your shopping mall in a way. So there's a growth factor to that. There you can expect higher returns. They are more risky because if that traffic goes away for some reasons, you don't have the regulated return. Okay. So it depends on the type of asset, but you're looking at somewhere in the range of dollar converted, somewhere in the range of 10 to 15% US dollars.
Okay. And this is with leverage?
This is basically your equity IRR post-leverage.
Post-leverage, okay.
But not with leverage on the equity. It's basically you're leveraging at the company level.
Sure. Penny, Rajiv was quoted in an Indian newspaper about paying 10 to 20% more on companies, but he said, our view is that it'll be 3 to 4 times its worth, so we don't mind paying that much. Can you take us through some of the thinking there?
I'll take you through, how many times I die every time he says something like that. I really wish he would stop saying that. But the fact is, not to sound flippant about it, we have a fiduciary responsibility when we're managing capital for people, and of course we care about how much we are paying for an asset. But if you are a long-term investor and you're buying into this thesis that this technology that we're investing in, and again, the vehicle, it can look like an OYO, which looks like a hospitality company, but it is not, right? So when you think that it's got applications far beyond what an ordinary person might originally perceive, then you sort of say, does it matter if I'm paying a little bit too much for the asset right now? I'm long-term, patient capital. I'm making this investment because I'm seeing the potential in the future. And then, Rajiv is correct, right? Ultimately, I wish he wouldn't be so expressive, and so I will say that we are looking to drive significant IRRs here at the Vision Fund. Masa will, if he were sitting here, the thing that he says that always makes me cringe is that his track record over the past 40 years has been 44% IRR. Masa is not in the business of diluting his track record, so you can see what is Masa shooting for now on a pool of $100 billion of capital. Is that realistic? I don't know. Far be it from me to say, but I would say we are the threshold that we need to meet when we go to IC on one of our deals is 30%. These are growth companies, right? So they're supposed to be growing. So we're supposed to be, putting up reasonable numbers. But I just wanted to touch on something you said. Like our worlds have actually touched because so I began my career at Morgan Stanley, where we pulled off an almost impossible feat and managed to acquire all of the parking spots within the loop in Chicago and lose money on it. So that was like really amazing. Yeah. We owned every single parking spot in the center of Chicago, and we still manage to lose money. And that's a little life lesson for you young people on leverage. Yes. But I digress. We have actually recently in the Vision Fund made an investment in parking, but with an exact opposite thesis. So what we're saying is, back in the day, even I'm not that old, right? So it was 10 years ago when everybody thought parking spots in the city of Chicago. I mean, these things are always going to be really important and be worth a premium. Well, now we've got ride sharing, right? So how many of us, even people my age, are starting to not own a car? I own a car in my place here in the US, but not in London. I take an Uber in London, and my kids, my older son has his driver's license. My younger son, who's 16, is like, Mom, do I have to? So, parking spots are obviously going to become less important. We have recently made a very large investment in parking facilities. Why did we do that? Because we are actually going to turn them into dark kitchens. So what do we believe in? We believe in the sharing economy, food delivery. People have got to, park their Ubers somewhere when they go to get something to eat. And so we're going to turn the parking garages into dark kitchens. But, as I was reading that investment committee memo when it came across, I was flashing back to some trauma at Morgan Stanley. But so
in one of our meetings this week, someone referred to that deal as the reason that the U.S. hasn't actually done more private infrastructure.
It's true.
So, and it shows the importance of structuring a PPP well.
Yes.
It was a poorly structured PPP, and this is what happens.
And a few other points on that. So first of all, so people sort of said, well, I'm not going to go to a place like India because I don't understand it. I'm afraid of investing in India. So I'm going to do something super safe, and I'm going to invest with Morgan Stanley in the United States, in the center of Chicago, and you can still lose your money if you put on too much leverage. And so I really think your point has resonated with me so much. You've got to have the right local partner, but if you've got the right local partner, there's a reason that our public pension plans in the United States are underfunded, and it is because they're paying all these fees to Carlyle and KKR and Blackstone because they're afraid to go into places that they don't understand. So if I'm a kid and I'm thinking about my career, I'm thinking emerging markets.
A quick anecdote, because you were asking about returns. So of course, and this is I think a lesson for anyone who's going through MBA school, which I did. And you do your financial models and you underwrite on the basis of a certain IRR. And Rajan will appreciate this example. So we partnered with someone for the airport space who actually built Bangalore Airport. Who basically did Bangalore Airport, and they were telling us that they underwrote that deal on about a 12% IRR. In 4 years, they sold out at 13 times money.
Wow.
That is an airport.
That's amazing.
So in a growth economy like India, if you choose the right asset and you choose the right partner, that's basically what you get.
Well, that's convinced me about India. I'm just going to toss one anecdote before, not an anecdote, but so the CIO of that parking garage that you invested in went to the School of Foreign Service.
Is that right?
Georgetown. And then, not having had enough of Georgetown, came back for an MBA at Georgetown. So he's a double Hoyer. And so well done on investments. It's who you invest with. Let's open up to Q&A. Let's go right here.
I have a comment and a question.
Sure.
I think not a lot of people know about this, but we should also give credit to Airtel for something that they did in Africa. IBM had been trying their best to get a foot in the door in Africa, but couldn't. And the only opportunity that they got, finally, was through Airtel. So IBM's entry into the African market was on the back of Airtel. If Mr. Mittal wants to elaborate on that. And the question is for Penny. I'm sorry, I'm going to ask you a question about London. Everybody seems to be in London as far as financial services or non-banking financial services are concerned. London is the place. Is it going to be the place anytime soon, or is it still continue?
Good Lord. I mean, it's so boring, this whole Brexit thing. It's every day. It's like it's all that they talk about, and then nothing seems to happen. And actually, it's now looking like it might get kicked down the road as much as a year or longer. It's hard to imagine that London is not going to be, if not but a major, hub. So I don't think so. I don't see how it happens. You walk down the street in London and there's people from all over the world. That is one of the things that I love about living there so much. So I don't think so, but I will, admit that I have been tuning the whole Brexit thing out, especially lately. It's reached almost absurdity, right? So what I know, the joke going around London now is, this is the first year that May will be out before April. In April or something, yeah.
We know that.
We'll see.
So we take one last question. Unfortunately, we ran a little over. Go ahead. Yeah, right here. Yep.
My name's Abhinav. I'm a student at Georgetown School of Foreign Service. My question is for you, Mr. Bose. And it's that infrastructure is critical for economic development, obviously. And you mentioned that there are multiple sources of capital that are looking to invest in India. But I feel like more often than not, in a lot of markets, internationally, the most prominent places for them to land that investment, the most kind of familiar, are the national level organizations, right? Like the highways or the power grid, especially in India. And my question is kind of, how do we get emerging these foreign investors or investors period to really penetrate into these state markets, right? Or state regions where infrastructure is just as important. It's just as important to local economic development, just as underfunded. And kind of what does your fund kind of see, and what's its role in India?
Great question, and thank you for this. And as Rajan said, India is not really about just the central, agencies, or central government agencies, or even the central government. Most of the activity happens at the state level, and a lot of them happen at the municipal, at the more local urban bodies. The way we operate is right now we are still in our early days. So we are working with the central government and some of the, so for example, an asset like an airport it's an easy one to tackle because most of these airports actually fall under the Airports Authority of India, which is a central government agency, but they have very strong local impact. The Delhi airport is supposed to have created about 100,000 jobs, around that airport. So it's a phenomenal project. So what we have done is we have chosen at the first stage 4 states that we've actually chosen to work with, where we believe that the regulatory framework and the thinking is progressive enough, and there is enough, I would say, commercial infrastructure opportunities, because we are operating commercially. So everything we do is commercial, and it has to generate a return. So we have to go to the places where we believe that that's going to happen. Now, having said that, we've also bid on Guwahati Airport because we feel that Guwahati would have been this is in Assam, where we believe that there is a very strong growth momentum, and it's a hub for the Northeast. So you choose, opportunities like that. But coming back to our relationship with the state government, so we are working with 4 state governments. Within NIF, we've created a group whose job it is to actually work with, and this is a little bit from my learnings at IFC, you work with the local authorities to actually develop a PPP program. So you go and you discuss with them what might be the opportunities, maybe a ring road around a city, which is a state highway, or something on the energy side. One of the big areas of investment going forward in India is going to be logistics. And the reason that it's a very interesting area is because post-GST, which is the central, the one tax in the whole country, the entire logistics mindset in the country has changed. So now you want to provide efficient logistics, but the logistics of land in India is a state level factor. Right, so you have to work with state governments to find a way to create the right logistics hubs, etc. So, answer to your question is, while we are working with the central governments, because you can have impact on a much broader part of set of assets in the country, we are also working with state governments. We have started relatively small with 4 of them. But over time, we expect to develop a very broad network with state governments. And we look at it not just as developing the opportunity, but also these relationships are crucial to manage the assets over a long-term concession. So hence, that relationship at the state and municipal level become very, very crucial for someone like us.
Well, thank you very much. Final thing I just say is, I hope you took away, the students in the audience, that both NIF, as well as SoftBank are recruiting. Get in touch. I'm sure, Bharti Enterprises, with all its growth, is recruiting as well. Please join me in thanking all three of our panelists who are absolutely wonderful. Thank you.